This is 82 ounces of silver. And right here, we have 1 ounce of gold. These two piles of silver and gold right here represent the current gold to silver ratio. And if you're wondering why that number is significant and what it means for stacking gold and silver, stick with us because we're going to talk about that today on Silver Seeker. So if you're a new stacker or if you're just getting into gold and silver, you're probably wondering what the gold to silver ratio actually means. Essentially, it is how many ounces of silver you could get at spot price for 1 ounce of gold at spot price. So if the spot price of gold was $1,000, for example, and that's way higher than that today, of course, and the ounce of silver was $10, that would be a ratio of 100 to 1, essentially meaning that at spot price, if you had an ounce of gold, you should be able to trade that for 100 ounces of silver. Now, of course, in a real world scenario, those two numbers don't necessarily correlate together. And the reason for that is there is generally a premium when you buy gold and silver physical products. For example, a 1 ounce gold eagle today is averaging around $100 over spot. 1 ounce silver rounds are averaging around $2.50 an ounce over spot per coin. So if you were to add up $2.50 times 80, that is over $200 in premium that you would pay for the 82 ounces of silver, whereas you would only pay $100 for the 1 ounce of gold. Now, of course, if we look at that with those real world numbers, you can see that GSR comes down to 77.89 based on current spot prices and average premiums. Of course, things can change. You can buy a 100 ounce bar that makes it a lot cheaper per ounce. And of course, there are bulk discounts if you buy a lot of silver at once. But generally, this is the idea without making it too complicated. That doesn't mean that the spot price gold to silver ratio is not important. It most certainly is. A lot of people that follow the GSR or the gold to silver ratio basically look at it as a way to see which metal is a better investment at the time. So for example, if the gold to silver ratio is really low, let's say 30 to 1, that means either silver is overpriced or gold is underpriced. Alternatively, if the gold to silver ratio is really high, let's say 82 to 1 like it is today, that means silver is underpriced or gold is overpriced. Now that is really important to look at because for that gold to silver ratio to get back to its historic averages, things need to happen. And so when I see gold to silver ratio, for example, today at 82 to 1, that signals to me that silver is the better metal to invest in. And the reason I say that is because for that gold to silver ratio to get back to that historical average, gold either needs to come down in price or silver needs to go up in price. And either way that goes, that shows me that silver is currently the better buy if you're stacking precious metals. Now, if that gold to silver ratio got really close together, you could then turn some of your silver into gold and actually stack more gold by going through silver. Or alternatively, you could do it the same way with a high gold to silver ratio by turning some of your gold into silver, because now you can get 82 ounces of gold, or silver, for your 1 ounce of gold. Of course, withholding current premiums, because that does make a bit of a difference. So of course, everything I'm telling you doesn't matter if I don't show you actual numbers and data to back up what I'm saying, which is what I do all the time. Now, of course, I'm not a financial advisor. What I'm showing you today is just, how I see it, and you take it and do with it what you want, seek out your own financial advice, blah, blah, blah. But let's take a look at this. So we are looking right here, this chart right here. You can actually zoom out farther, but we're going to go into around 2008 because this is where I really want to start. So we're going to look at this spike right here of gold to silver ratio. So December 8th of 2008, 78.97 to 1. Here we go, December 22nd, it was 80.1 to 1. That's basically today's silver rate to gold ratio, right? So let's say in December 22nd, you bought 1 ounce of gold instead of 80 ounces of silver. Well, here's what happens. You fast forward, now we see this significant dip. And of course, you're never going to catch the exact top or the exact bottom. No one's expecting you to. But if you were to have taken that 1 ounce of gold, and then if you go down here, that dip, you can see your 1 ounce of gold isn't worth near as much silver as it was back here. So, for example, when it was 80 to 1, if you would have just bought 80 ounces of silver, and then you wanted gold, but you bought 80 ounces of silver because you saw that gold to silver ratio was just so big, you're like, all right, I'll buy, the 80 ounces of silver. And then you wait until this dip right here. And you can see on April 25th, it gets to as low as 32.29. 80 ounces of silver would have been able to be traded for over 2 ounces of gold, even including premiums probably at that time, right? So you literally could have, instead of buying 1 ounce of gold December 8th of 2008, because that silver to gold ratio was so high, you bought silver and then you waited till that gold to silver ratio tightened up like it did here. Again, we're not trying to catch the bottom. You could, right here, March, it was 38.77. April, it got down to 33, but there's a significant dip here. You could have turned that silver into the gold you were wanting to get, except for now you have a lot more gold. Now let's go even farther. So let's say you did that. You bought silver. Now you have 2 ounces of gold. You're like, well, I'm going to wait till that gold to silver ratio really gets far apart again. Then I'm going to turn it back into silver. So we wait just a few years. It doesn't take long, right? We go up, we go up, we go up. Take a look at this. And we don't even have to pick, like, it's not like we're trying to catch a peak right here. Like, it's just going up. It's just continuing to go up. So we wait until it gets to like 80 to 1, which is where it was when we were originally going to make that transaction, right? When we were originally going to buy the 1 ounce of gold. Well, now we have 2 ounces of gold. Now we wait until it gets over here to 80 to 1. And now your 2 ounces of gold can turn into 160 ounces of silver. So you went from 80 ounces to 160 ounces of silver without actually spending any extra money, just by buying the gold to silver ratio. So of course, and there are other examples here. This isn't a perfect science, and obviously no one's ever going to catch the bottom of anything. No one's ever going to catch the peak. Like, no one's like, oh, March 16th, I see that it's 119.76. Today's the peak. I just know it. I have, a vision. I just know. Like, very few people are going to catch the exact top unless they know something's going on, and we won't get into that here. But anyway, you get the idea. Still, using this ratio, you absolutely can see where I believe that in today's market, 82 to 1 is a really high number, because we could absolutely see gold and silver tighten up once again. And if it tightens up once again, if you're really wanting gold, you're better off buying silver now, waiting till that gold to silver ratio tightens up, and then swapping that silver into gold. Now, of course, not every single gold and silver stacker look at the gold and silver ratio as an opportunity to trade one for the other and continue to build their stack for no fiat currency. As with anything, there's always risks involved. A lot of people, myself included, generally just continue to stack gold and silver and then look at the GSR as a way to determine which one is the better buy at the time. So if gold and silver are sitting at 30 to 1 or 40 to 1, I might be thinking, all right, maybe I should buy some gold. If silver and gold are sitting at 80 to 1, then I might be thinking, okay, maybe it's time to buy silver because that number's far apart. And as I already said earlier in the video, for those numbers to come back together, gold would have to lower in value or silver would have to increase in value. But at the end of the day, the best thing to do is to just have gold and silver in your stack as part of your portfolio in case we ever do get to the time where we actually need to have gold and silver. And of course, stacking gold and silver at low premiums, in other words, low cost versus spot price, is always the best way to go. So as I said in my previous video just a couple of days ago, stay away from things that have incredibly high premiums, because at the end of the day, it's always best to just stack more gold and silver. I hope you guys enjoyed this video and learned a little bit with this discussion. If you did, do me a favor, go down below and make sure you are subscribed. It really helps me continue to grow the channel. Additionally, check out this video above where I talk about some gold items that you should not be stacking. And other than that, we will see you in the very next video, and you have a great rest of your day.